Hello, today I'll be presenting on the Walt Disney Company stock and telling you whether I take a buy position or a sell position, and I'll be going into why. And so first off, a little agenda of the presentation. First off, I'll be telling you my investment decision, and then I'll be going into the company and industry background. After that, I'll be going into the qualitative and quantitative analysis that went into evaluating the stock, and then I'll go into the investment risk and the hedging strategy that I would use when buying Disney stock. So like I said, the investment decision I went with the current Disney stock price of $146.21, I recommend that Disney as a strong buy with the price target of $191, obviously a lot higher than the current Disney stock price. And so the way I evaluated this was with the traditional DCF estimate with a 60% weight towards that and a relative value estimate of 40% weight going towards that. So with the DCF estimate, I came up with the price of $198.01 per stock per share, and with the relative value estimate, I went with $180.47 per share. So now, going to Disney as a company. So Disney is one of the largest media conglomerates, but they're not just restrained to media. So obviously with media, they have ABC, ESPN, Disney Channel, huge networks, but also they have many theme parks such as Disneyland and Disney World all across the globe. But also they have studio entertainment such as Pixar, Marvel Studios, and the Walt Disney Studios. But going further from that, they also are now into the direct-to-consumer and international services with their new streaming service of Disney Plus. Also with the 30% stake in Hulu. But with Disney Plus, they're adding themselves to the streaming services game and becoming a major player in that, competing against those big companies such as Netflix. Now let's go into Disney's past financial performance. So looking at this chart from Bloomberg, we can see in 2019 Disney's price has skyrocketed due to Disney adapting to the market and coming up with emerging products and movies and films. However, with this price of $146.21, I do not believe this is a ceiling. In fact, I believe, like I said, $190 is somewhere I can see this stock going within short doing, and therefore I do believe that due to this financial performance, historical financial performance and this growth, the growth is not ending right now. The growth will continue. Now looking at Disney's main competitors, looking at this visual here, we can see the streaming prices here. So Disney Plus is $6.99 per month, but Netflix, for example, is $12.99 per month. HBO is $14.99 per month. So consumers will tend to go towards the cheaper service, obviously, and Disney Plus offers that pricing point where it's very affordable and it offers quality content. Now going into the qualitative analysis of Disney and why I chose the buy position. First off, Disney's theme parks. Attendance has been skyrocketing throughout the years, and also Disney's new additions of rides such as Toy Story rides and Star Wars rides are making kids wanting to go to these Disney parks, and therefore revenue from these parks is going through the roof. And also Disney Plus. Throughout the next 5 years, analysts are predicting over 90 million subscribers, which is a huge dent in the streaming service and probably will be taking away subscribers from Netflix and HBO Go and Prime Video. Also, with Disney stores, with the new movies coming out, such as Frozen 2 and Spider-Man coming out in 2021, we can see these Disney stores coming into Target, 25 new stores actually. And also, with these stores obviously putting out products such as Frozen 2 products, cater towards those kids, their target market, so we can also see revenue streams coming from there. Now going into the quantitative analysis, we obviously had to make a couple of assumptions. I went with the beta of 0.85 simply because I saw a lot of analyst betas expectations of around 0.9 to 1, and I simply believe due to their limitless potential that the beta should be lower than that, so I went with 0.85 due to the low riskiness of investing in this stock in my opinion. The country premium was a little on the higher side of 6.85 due to illegal streaming services and piracy that I'll get into further in the presentation. So therefore, I went on the higher side, a little closer to 7 of 6.85. So I got the cost of equity of 7.6525 and the after-tax cost of debt of 1.81, giving us a weighted average cost of capital of 6.66. And now I got the terminal growth of 3% simply because this is a lot lower, sometimes lower than a lot of analysts' expectations. I went with 3% because they're going into a very saturated market, so I can't see them growing at a very exponential rate forever. So I went with 3%. Now going into projected cash flows, I went with the revenue growth percent of 10% from 2021 to 2023. I believe this is very conservative in my opinion. As you can see, 2019 and 2020 was 17%. EBIT was around 25 to 26% with their average EBITDA percentage of 25%. The average EBITDA is at 22%, so I believe this is a little higher based off my based off my bullish perspective on the stock. And therefore, when conducting the DCF stock price estimate, after getting a enterprise value of $406,457.06, obviously this is in millions, taking away debt and adding back cash and marketable securities, I got to a stock price estimate of $198.02. Now, obviously, we don't only want to rely on DCF simply because there's a lot of assumptions being made with the DCF, so I obviously use their relative value estimate. And so looking at a lot of their companies within the competitors within the industry, such as Comcast, Discovery, and Six Flags Entertainment when dealing with theme parks, the analyst gave a multiple of enterprise value of EBITDA multiple of 20.35, but I went a little higher and got to 20.5 simply because I do believe that their potential to grow, their multiple should be a little higher and elevated. So I went with 20.5. Using this multiple, I got to the Disney value per share of $180.47. Compared to the current price of $146.21, this gives potential upside of 23%. And so, with 60% weight going towards the DCF and 40% weight going towards a relative value, I did get to the price target of $191, and it compared to Disney's current price of $146.21, this is a potential upside of 30.63%. And I do believe I was very conservative with some of these estimations, and some of the estimations that I were a little elevated on, there was some merit to it that I feel like I have thoroughly explained. And so I do believe that Disney is a strong buy. However, there are investment risks, such as, for example, with 43% of their revenues coming from cable networks such as ESPN and ABC, Disney Channel, for example, cable cutting has been a major issue around. Not many people are watching TV across the world. However, I do believe they address this concern by adding Disney Plus or streaming service. However, with this streaming service, there's a lot of risk in that simply because piracy and illegal streaming has become a major issue in today's world, and therefore that may take away from potential customers as they may not want to pay that $6.99 for Disney Plus and go towards a legal streaming service. So that's definitely a risk when looking and investing in Disney. So if I were recommending to buy Disney, I would obviously want to provide a hedging strategy to make sure that you're offsetting any risk. So if you're buying Disney, my strategy would be to sell any Netflix stock that you have. The reason why I say that is, one, because Disney Plus is coming into the market, and I feel like this is a very disruptive innovation, and that will severely mess with Netflix's subscriber count. Already, they're burning through cash, but to add on to that, due to their burning of cash, they're increasing their price points per month, and therefore this is making consumers a little wary of subscribing to Netflix and maybe switching over to streaming services such as Disney Plus due to their lower price point. Also, Netflix is losing a lot of shows. They just lost The Office, which is one of the huge hits on Netflix due to NBC taking back the rights. However, they did add Seinfeld, but I personally believe with Disney and Apple both adding such great content to their streaming services, this might not matter in the end. And so therefore, with all this, I do believe that Disney is a strong buy, and I would recommend any investor buying in Disney with my target price of $191. I believe there's endless potential from the current stock price, and I would definitely recommend it. Thank you.